Hey traders, welcome back to Your Nifty Guy, your daily dose of smart, no nonsense Nifty analysis. In today's video, I'll break down what happened in the market, what it means for tomorrow, and exactly how I am planning to trade it. No noise, just a clear, actionable plan. If this helps you prep better for the next trading day, make sure to like the video, subscribe to the channel if you haven't already, and drop a comment with your view or any questions. Let's get started with the chart. As usual, the video will be divided into two parts. First part will be discussing about what happened in the market versus what we had planned. And in the second part, we will be discussing the plan of action for tomorrow. And while we are doing so, obviously, as usual, we'll be discussing a lot of price action concepts. So let's get started. Markets opened with a huge gap down on the basis of 25% tariff that Mr. Trump has imposed on India. Now, it has been a key point of observation for me over a long period of time that whenever a uncertain event of news or something like this happens or comes out in the market, post the market, and markets opens with a big gap down, it usually recovers, right? You can go back and check in the past whenever something like this has happened, when the war news was announced or when election results, something like this, which are unexpected and something that you get out of the box, out of the blue. Although people were expecting it, but then again, this is negative news, and it is because of the news sentiment that the markets opened with a big gap down, and that is something which usually does not sustain, and markets will usually be recovering or trying to fill the gap at least. Today's markets were phenomenal, and we'll be discussing in just about a short while what exactly that are the trades that we had taken. I have also recorded a video on my favorite setup, which is the W setup, and I will be uploading it tomorrow evening, sharp at 4 p.m. So make sure to mark your calendars and put a note of it, and make sure to watch it. It is one of my most favorite setups, and something which I use on a daily basis. Even today, the two trades which I took were based on the same. So make sure to watch that video so that you get an in-depth understanding of that particular concept that I use. So uh, today, the first trade, or I am sorry, guys, I just got a bit distracted because of some event at home. Uh, So, like I was saying, so today's the markets opened with a gap down, and as is the observation that I have had in the past, whenever there's a news-based gap down, it usually market tries to at least fill the gap, if not recover completely. Uh, After opening, market showed some sign of recovery, took a resistance from this particular zone that we had drawn. Now, this was supposed to be a support zone if above here, and a resistance zone if below down here. Took a resistance from here, formed a double bottom around here. This was the entry of the first trade that I had taken, which got exited somewhere around here. And I actually took a re-entry in this particular trade once this high was taken out, because the markets were looking at quite bullish. And once you can see the concept of polarity, resistance once broken turns into a support, and markets did take a support from these level and again hovered up again. When I entered this trade, the initial SL was around here. Then I moved the SL around here, moved the SL to this swing low, and then ultimately the trailing stop loss got triggered around here. Once I entered around here, this was a pretty big SL, so I did not take this particular big SL as a original SL for my trade. What I planned was a part of this particular move that I had captured to be only kept as a stop loss. But then again, markets were good and markets moved a good lot good in my favor. I exited this particular trade also around this point. Again, there's nothing exact top or bottom that you will be capturing, but then again, the reason of exiting around here was this particular uh, pin bar which had formed. Now I wanted a follow through candle to it. The next candle was a inside bar, and then the third candle formed, which is my trailing stop loss method that I have discussed many times. The low was lower than the high was lower than the previous high, the low was lower than the previous low, and the closing was not below it, but almost very close to it. Plus, as I told you, once if I'm looking for a long entry around here, this is the resistance level around which I will be looking at booking my positions. And so this is the reason why I exited the trade at this particular level. The second entry was again from our resistance level. Markets went up, gave the pullback, went up, could not cross this high, a double top, classic double top formation around here. Entry around this candle, stop loss here. Stop loss moved to around here when this swing was formed and broken down. This was a very pretty good and straightforward trade, and I had also combined this with the expiry trade that I have spoken about in yesterday's video and in a lot of the weekly expiry and the monthly expiry video that I have. So till around this point, around 1:30, 1:40, almost till around 2 p.m., the PCR or the put call ratio was on the bullish side, right? So there was a lot of uh, put and strong put writing at all the levels. And once this particular low was taken out, market started going down. All those people started exiting, adding fuel to the fire. And this is the reason why I took this particular trade on the downside. Number one reason, at our resistance zone of resistance. Number two, uh, we could see the open interest getting changed on a minute to minute basis. And again, of course, price action being confirming, one of my favorite setups. You will get it in detail in tomorrow's video, so make sure to watch it. So this was it about today's trading, which is an extremely simple trade. Both the trades were pretty simple, pretty straightforward, and because of the momentum that the markets had, both gave good targets in option buying. Absolutely lovely day. Now for tomorrow, first we'll be doing a monthly candle analysis because the July month has just finished today, and it is extremely important to look at what the market is on a higher time frame. So if we are to look at a monthly time frame, India's and believe in India's growth story, despite what Mr. Trump has to say, India and Russian markets are dead. Again, that has got deep political reasons and something that we should not delve into. But I believe in India's growth story, and in case if this is a we are going planning to move up to create a new higher high or maybe consolidate around here and then create a new higher high. This particular July month candle is an inside bar in the previous month's candle. So as per the three candlestick rules that we follow, this is still not a reversal on monthly time frame. Like around here, the month of October last year, this was a reversal candle, right? The high was lower than previous high, the low was lower than previous low, the closing was also lower than the it closed lower than the previous low as well. So this is a reversal candle, but around here we have just got an inside bar, which is kind of a halt candle, and that is something that we can also observe on a daily time frame. So nonetheless, on a daily time frame, again, the bounce that we saw yesterday, followed by this doji candle, and today's candle was again, uh, if it would have given a closing up higher up above, it would have been good. So till around before this particular fall came in, which we also traded, I am telling you, this is what I was looking at. It was a beautiful W waiting for its breakout. But then again, markets have other plan and it decided to move down almost a good bit. But that can also be a expiry move. So I am hoping that this is an expiry move. I'll be deleting this. We will be deleting this. And since no new low has been formed on a daily time frame, this level still sustains and holds true for us, right? But this level, make sure to note that it has already been tested once. Now, for tomorrow, the plan of action has to be very simple. Number one, I am expecting Nifty to be a bit volatile and sideways and try to take the SL on both the sides. So, sincere request, keep your trading activity very, very low. Keep it to lower quantities than what you usually trade. Have strict stop losses and trail your positions very, very tightly. So, that is number one uh, suggestion from my end that would be going ahead for a couple of days. I believe this is kind of a range that is being forming in the markets, even if market around because market has shown some bearishness. Even if we have to go up around from here, will not be immediately be bouncing off from around here, right? We need to create some base around here, get some liquidity, and then we will be moving up ahead. So that is the reason why I am expecting certain time pass zone to be around here, and that is the reason the suggestion that I just gave you. Above this high, we can look for a long entry. I will actually wait for markets to take down today's low. Because today's low market saw moves on both the sides, I will not be taking any major trades in between this particular zone. This will be a no trading zone for me. So after a very long time, I believe I am giving you guys a simple trade plan and analysis. Maybe you don't get to trade tomorrow if market stays inside this range. If we open flat, the journey to either up or down will be a longer one, and I believe that we should be waiting for the markets to either go up or come down. And in case if market again comes up around here, say for example, market opens flat around here, comes back around here and goes down, yes, we can take a short trade at around these levels, right? That is something that we can definitely be planning. But apart from that, short trade should always be around here. Say, for example, market does not even reach this level, it comes only to this level and then again goes. So this is again a double top which will be forming on a 15 minutes time frame, and you can take a short entry based on that. But apart from that, wait for this to be taken out, this today's high to be taken out for a long side entry. A clear short trade will be triggered below this. Once again, if we are entering this trade, key price action to be noted around this gap area, which is marked on our charts for a long time, and it is marked for a reason. And again, this is a setup that can be traded if it forms. So a simple trading plan for tomorrow. Number one, keep it simple, keep it low. And number two, in case any of these scenarios plays out, play with lower quantities. So I believe the trading plan is simple and clear. And I'll see you guys tomorrow with the setup video that I have already recorded, and that will be posted tomorrow. So make sure to watch it. And I'll see you guys again tomorrow in that video. Till then, thanks for tuning in and cheers.